Welcome back to All Things Money. My name is David Blain, and during today's show we're taking a look at the stock market and what's happening in the market. As I've mentioned, as I left the office to come record the show, the market was off about 2% for the week. Does this mean that we're heading for another bear market? Is it a short-term correction? What does all this mean? Well, we think that it certainly is a short-term correction. We've been discussing this for several weeks now on the show, that this was a distinct possibility, and it looks like it is coming to fruition. Before we get into this last segment, let me give you our phone number, which is 252-633-0107. If you have any comments or questions on the show, feel free to give us a call. If there's a topic you'd like addressed on a future show, let us know. Our email is allthingsmoney@dlblain.com. And you can always visit us on the web, which is www.dlblain.com. There you can also find archives of the show if you missed the first few segments. So right before the break, we were talking about what's called the golden cross, which in the investment world is when the 50-day moving average of an index or a stock moves above its 200-day moving average. And suffice to say, this is a very bullish type indicator. Since 1928, when the S&P 500 index has moved, has this golden cross has occurred, the 50-day moving average moves above the 200-day moving average. The stock market has gained 8.9% on average per year during this, when this happens. This has beaten the buy and hold of an average of 5.1% for the same period. And so you may be thinking, oh, that's the holy grail, this golden cross. If I just buy the market when the 50-day moving average crosses above the 200-day moving average, and sell when the 50-day moving average drops below the 200-day moving average. And since 1928, that has been correct, that you would have earned about 8.9% versus buy and hold of 5.1%. Of course, that's before taxes and fees and so forth. But the key thing is since 1928, there have been long periods of time where this was not necessarily a good strategy. And that's why we always emphasize on the show, you need to know what the secular backdrop of the economy and the market is. And currently in the United States, and frankly, in the entire developed world, meaning Europe, Japan, developed Europe, the UK, France, Germany, Japan, countries like that, we are in a secular bear market, meaning a multi-year bear market. And so during secular bear markets, these long-term trend indicators, such as the 50-day moving average versus the 200-day, typically tend not to work that well. So we had Ned Davis Research take a look at this for us, and they crunched the numbers. And since 1929, golden cross signals that have occurred within secular bull markets have been profitable 76% of the time, with a median gain of 19.9%. So when markets are generally positive, essentially what this is saying is when the 50-day moves above the 200-day, in a bull market is a great time to buy. However, in secular bear markets such as we're in now, the signals have only been profitable 58% of the time and a median gain of only 1.3%. So what this means, you've got to know what backdrop you're in a secular bear market in stocks in the United States. A lot of these longer term trend indicators do not work as well. And so we typically focus on shorter term trends that are happening, as well as sentiment, the optimism and pessimism of the participants in the market, as well as mean reversion, which is essentially another way of saying valuation indicators. We typically pay attention to those until the market has run its course. So that's kind of to recap on the stock market volatility that's currently happening. We fully expected this. A lot of the indicators had gotten too complacent with the market advance since April. And so every so often, the market has to correct. We do not think that the long-term cyclical bull market is in danger, especially not overseas. Well, we have a couple minutes left. I wanted to talk about gold. Gold is getting a lot of press these days. There's a lot of confusion. Is gold in a bubble? Is it too late to buy? Should I sell? Is the currencies going to collapse? There's a lot of things that's going on with gold, and so we want to try to address that to make sure that you're positioning your portfolio in the best way possible. Well, the first thing I want to mention is that gold is certainly no longer the contrarian investment that it was, say, back in 2001. Coming out of the stock bull market of the late 1990s, nobody wanted to own gold, and so it was a very contrarian thing at the turn of the millennium. But as Ned Davis says, you'd have to be stranded on Gilligan's Island not to have heard of gold's move in the last decade. And the gold has been rising not only on an absolute basis, but in contrast to every currency just about in the developed world. And so it's those people that actually, I think, give rise to the fact that there is still some room to move higher when it comes to gold. Where you want to be concerned is when every single person says, you've got to own stocks or you've got to own gold. Well, there's still a fair amount of people out there that are still negative on gold. And so we like to think as gold's current move is somewhere in the middle inning of its current bull market in gold. As a way of reference, in the last 110 years, there have been certain secular moves in commodities to include gold. The current commodity cycle is about 10 years old. Like I mentioned before, it started somewhere around 2001. The shortest commodity cycle in the past 110 years was 12 years, 1968 to 1980. And the longest was closer to 19 years, which took place from 1901 to 1920. So there is precedent for these long-term moves in commodities, and gold is certainly included in that. Well, we're kind of running out of time, so I'm going to leave you with a teaser that if you want to hear more on this, you're going to have to tune in next week. Either watch us on TV, cable TV 10, or tune us in on the radio 94.1 FM. For All Things Money, I am David Blain, and we will see you next week.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.